Here we go. Cheers. Good morning, welcome to IG's early morning call. It's Wednesday, the 19th of April. Let's take a look at the headlines. It's hot, hot, hot. UK inflation keeps the pressure on the Bank of England to continue raising interest rates. Netflix earnings out late last night, stock down 12% almost at one point last night. Then a recovery came as the press conference started. And it's all about Tesla reporting after the bell tonight. It's announced another price cut. Let's take a look at what's happening on volatility. We got our first uptick in a little over a week, 1976. It's brought us away from levels not seen since the 2nd of February. We are ever so close to breaking this line of support. If this line at 1890 gets broken, we'll then be taking it down to levels not seen since the 4th of November 2021. There's good reason for this, because risk assets are still in amongst the most appreciated assets in the market. Not necessarily here in London. You can see actually we've now got a red candle here. I'll talk you through this in the terms of the context of what we've seen on inflation this morning, because this is keeping the pressure very much on the Bank of England. I want to show you very briefly what's happening with sterling. And as I said, I'll go into some more detail about this in just a couple of minutes' time. Look at these 10-minute candles. This is the uptick we've seen in sterling as a result of that move that we've seen on inflation. But since then, you can see some of that gain for sterling has now evaporated. More on this in just a few moments' time. I want to take a look at what's happening though in Germany. Yesterday, we had a new high that we'd not seen on the German DAX since the 17th of January last year. And since then, we've got a little bit of a downturn. Markets looking as though they could well open with a little bit of negativity today now. At the top of the hour, 75.25, after another new all-time record high on the French CAC 40 late in yesterday's session on the 24-hour markets at 75.59. Currently trading at 79.26. So we're only a handful of points away from an all-time record high, but nonetheless looking potentially for a slightly slower start to the beginning of the session, as I said, at the top of the hour. Let's take a look at what's been happening in the Asia-Pacific markets, just to underscore some of these areas of softness within equities today, despite the fact we've seen that new low print late last night on volatility. Money coming out of the Nikkei, but only by a small margin. Hang Seng stock index has been a little bit volatile recently. A down day today by a margin of 0.75%, I should say. And that market still has around about an hour or so to go on the cash session today. S&P ASX 200, it'll go down as a day of positive moves, but it's only by a very, very slender margin. Wall Street last night, let's look at what's been happening there, because the market's showing a mixed performance overall. The Nasdaq and the Dow Industrials, by one of the slimmest of margins on the way down. We saw a gain of almost 10% on the S&P 500. Let me follow up on that S&P 500 just to show you what's happening with the market moves. And I think part of what happened late yesterday, you can see these 24-hour markets. Look at that, a very, very slender candle, opening and closing pretty much at the same point. It was actually on the 24-hour markets. It did show a positive move, but it was only by a slender margin. But the point is that the close last night, we saw the highest close we've seen on these markets since the 16th of February. And then came the pullback. Netflix, I think, adding to the concerns. This market is it's like a tightly drawn drum at the moment, where you've got the skin pulled really, really tight. And it just needs for one fault line to appear, I think, and then we'll see markets tumble. Yesterday, I was talking to one guest who was talking about a return to these levels down here. He was talking about yield curves. This is out on IG.com. You can pick this interview up on the IG website and indeed on YouTube as well. And he was talking about a return to these lows down here. This is what the yield curve is telling him at the moment. These lows down here we saw on the 13th of October last year at 34.90. So we're looking there for something like around about 600-700 points to be lost on the S&P 500 sometime later on this year. And it is waiting for that drum just to start to rip before I think a lot of money comes out of the market. Just want to show you what's going on with tech stocks, because they have in some respects been some of the better performers, lifting 23% up from the January lows to the highs that we saw back on the 4th of April. 4th of April. Since then, it's been pretty much sidelined. There's a narrow band between 128.20 and the highs we saw up here at 132 at 13,200. So I think we're just waiting for what some believe is an inevitable pullback in earnings later on this year, and concerns about recession as well continue. Now, UK inflation is down, but the headline consumer price inflation remains stubbornly high at over 10%. It came in at 10.1% on the headline number, down from 10.4%, so it was a drop. The core rate remains above 6%. The consensus had been for a 6.2% reading. Now, this maintains the pressure on the Bank of England to keep raising interest rates. The fact that the headline rate remains in double digits means it's been in this region since August last year. Economists had expected the figure to fall to 9.8%. It had also been expected to fall back into single digits last month, but before an unexpected increase to 10.4% amid soaring food prices. Now, food and non-alcoholic drink prices were the key driver of rising inflation this time around, rising by 19.2% in the year through to March. Vegetable shortages had helped push in food and non-alcohol prices up 18.2% in February, reflecting the sharpest increase in more than 45 years. And the pressures remain. Just wanted to reference what's happening on the 10-minute chart for sterling against the US dollar, just to show you the initial rise that we had for sterling, and then came the pullback. The concerns about what's happening here is that this increase in inflation is going to keep the pressure on the Bank of England. The Bank of England, if it continues to raise interest rates, then there will be potentially a greater chance of recession later on in the year for the UK economy. Let's take a look at what's been happening with the one piece of economic data out this morning. I want to follow up now on some of the corporate news headlines. And for that, I want to go, first of all, to the Dutch markets, where we got ASML. This is the world's leading manufacturer of chip equipment. They make the machinery that makes the chips. Revenue coming in at 6.75 billion. Now, this is better than expected. Expectations have been for 6.3 billion euros. Net income also beating expectations, as you can see there. We've been looking for 1.6 billion. Almost 2 billion euros coming through in this most recent period. Expecting 2023 sales to grow over 25%. I think these look good numbers on the whole. If the markets do fall at the start, there could be a little bit of selling pressure. Yesterday, we saw a rise of almost 1.2% in the stock after that big drop at the beginning of the week. So we're starting at 590 euros 15. If you are long on this, your stock goes down here under this line here, just below the 580 euro level. 590.15 is where we're opening there. ASML is a key supplier to computer chip makers, and it sees net sales in the current quarter between 6.5 and 7 billion, also topping expectations. I think another reason possibly to buy into this stock at the start of today's session. Just Eat Takeaway has come through with numbers as well. Another stock worth watching. Another stock that trades interestingly on the Dutch markets. First quarter trading updates. So there's not the full detail, but it's given us some indications as to how it feels about the full year. Orders amounted to 227.8 million in the first quarter, missing expectations of 231.1 million. Still, the group raising its 2023 adjusted core profit outlook. This is Europe's biggest meal delivery company, expecting adjusted EBITDA of 275 million euros in 2023. Earlier in January, the group guided for adjusted EBITDA of 225 million. So that's positive. Also announcing a 150 million euro share buyback program. This trades under the ticker symbol JET, and we've seen 4 days of gains, taking us up to 14.37, 14 euros 37 cents. So we're off the lows. These lows equated to the lows that we saw back in October last year. So it's a little bit of a rally underway today. Can it continue? There are reasons why to suggest it might do, but I think there are also some frailties within the business that it's reporting with that shortfall of orders that it's come through for in the first quarter of the year. Now, last night, Netflix beat Wall Street estimates for the first quarter earnings per share only by the slimmest of margins last night. The streaming video company posting earnings of $2.88 per share, 2 cents higher than forecast. Revenue came in broadly in line at 8.16 billion. from January through to March, Netflix added 1.75 million streaming subscribers, missing analyst estimates of over 2 million additions. Now, that is no longer the benchmark it wants to be measured by. It wants to be measured by revenues. But look what happened after the bell late last night on the IG platform. There was a tremendous drop in the price of Netflix, taking us down, in fact, to levels not seen since the 23rd of March. This was an 11, almost 12% drop in the stock. For the current quarter, Netflix came up with lower than expected numbers. It forecast 8.24 billion in revenue. This is what it wants to be known for these days now, revenue rather than subscribers. Diluted earnings per share, $2.86. Analysts are expecting something far bigger than that. Now, this drop that we saw here of around about 12% completely recovered its losses in a matter of 40 minutes, lifted by an upbeat post-earnings video interview. The company says, "We're growing and we're profitable." This is the co-chief executive, Ted Sarandos, who said, "We have a clear path to accelerate growth in both revenue and profit, and we're executing it," which is why we saw this big recovery to end not too far away from where we started the trading day at $333.13. Now, let's take a look forward to what's happening a little bit later on today. After the bell tonight, we get the EV car maker Tesla coming through with numbers. Wall Street expecting earnings of 86 cents a share. Revenues forecast to rise by 20% compared to the same period last year to 23.78 billion. Earlier this year, Elon Musk considered it possible for Tesla to produce 2 million cars this year. But given the current economic environment, demand is really what preoccupies the market. To support demand, Tesla has repeatedly cut its prices since the month of January. Now, bearing in mind, Tesla has a long lead time for car orders. I'm not quite sure how it's dealing with those people that ordered at the back end of last year. Are they offering these subsidies, these price cuts to those that are in the pipeline? If not, I would judge that very, very unfair. Early this morning, it cut prices for a sixth time this year. The group cutting the price for its Model Y long range and performance by $3,000, and its Model 3 rear-wheel drive by $2,000. Tesla started cutting prices back in China in January, then more recently in Europe, Israel, Singapore. Certainly will raise concerns about its profile margins, profit margins. But if it increases sales, then the margin drop will be soaked up by the extra sales. But they need those extra sales. Watch out for that later on tonight. We've got this rising line of support here. If you're long on this going into the numbers tonight, we're currently trading at 184.02. That will be this opening trade we'll see on the IG platform at 9 o'clock this morning, UK time. It reports after the bell tonight. If you're long on this, your stop goes under the underside of this rising line of support. So you'll stop at around about $178 level. We'll be opening at 184.02. If we see a break of this, this is the line then to watch out for. These lows we had here back on the 13th of March at 164.02. I can easily see this being broken if we see a disappointing number coming through from Tesla. Look at this rise we saw from the beginning of January up to the highs, the recent highs on the 16th of Feb at $217. That was 115% up for the stock. So I think there's some potential for downside here if we get a disappointing number out. Interesting enough, I was reading overnight that apparently Elon Musk has come out with the news that he'll be dealing with his online press conference on Twitter. No real surprises, I guess, after the bell tonight. Also after the bell tonight, IBM comes through with numbers. Big Blue reporting earnings for the first quarter, anticipating earnings of $1.27 per share. This is according to estimates from the street. Revenue expected to rise marginally to $14.37 billion, but below IBM expectations of $14.58 billion. In the detail, the group's forecast to post a 1.2% rise in software revenue, 3.7% revenue rise in its consulting revenue business, and infrastructure revenue expected to slip by a margin of 1%. Another stock trades all sessions on the IG platform. It'll open at 9 o'clock this morning. Here we've got the share price chart here. It'll open at 9 o'clock this morning at $127.29. This is the area down here, I think, that could be in danger if we see a disappointing number at $121.72. Conversely, you're looking to beat the 133.46 level if you get some good numbers out tonight. And that coincides with the red line here, which is the 200-day moving average at just over $134 a share. So those are the two areas to watch out for. And you put your stop loss in place depending whether you've got to go up or down from this point as at the close tonight when it produces those figures. Also set to report today, let me just quickly tell you, Abbott Labs, Morgan Stanley, Alcoa, NASDAQ. I'm just brushing over the Morgan Stanley one. Under normal circumstances, we'd normally cover these big banks, but it's not all sessions on the IG platform for various mechanical reasons as to why we don't do that. But nonetheless, it is a stock to watch at the start of today's trade because of those earnings out before the bell today. Now, let's get back to the charts. Just wanted to quickly soak up a couple more areas to watch out for today. Let's bring up a chart of Brent crude. It's down in session today, and in fact, if we close at these levels, it will be around about the lowest close we've seen since the 7th of March this year. US crude oil and fuel inventories fell last week, according to the API numbers out late yesterday, the American Petroleum Institute. Crude stocks fell by around about 2.7 million barrels in the week ending April 14th. Gasoline inventories down. Distillate stocks fell by 1.9 million barrels. You can see that the soaking up of some of the excess oil in the market is, I guess, because of this increase in demand we've been hearing about, some of which has come through from China. Let's quickly go back to the charts and just take in a couple more areas of the market. Doesn't look like I got myself a gold chart here. Let me just quickly dial in spot gold so that we can check on what's happening there. Let me tell you, it's not actually too far removed from where we closed out. Well, it is actually on the way down now, I beg your pardon. In the last hour or so, we've seen a drop now for gold. And in fact, if we close at these levels, it'll be the lowest close we've seen since the 4th of April. So we're now $8 below the 2,000 level. A little bit of softness coming back into this trade for whatever reason, just a little bit of air taken out of the tires at the moment. What I did here earlier in the week, I think this is Monday, I drew this fib on here. I was concerned about the fact we could well see some further downside for gold. And if there is further downside to come at 1992, this fib here might help us understand where the line of support could be if we see further declines for gold. 1897 is a line of support of interest on the fib, 61.8% retracement. The 76.4% retracement is at 1862. And it's at that sort of area where I'd be looking then possibly to go back in a longer trade back to gold. I'm still thinking it's going to hit the record highs that we saw a year or so ago at 2075. To get there, it's got to overcome this area of softness, which I think potentially now has some further downside to go. One area of the market that doesn't seem to have any downside at all at the moment, this is London cocoa prices. Look at this. Another day of really solid gains yesterday, closing out at 22.73. London markets opening shortly, and we're now trading there at levels not seen since the 30th of September 2016. That's it. We're back at 10:30 with Charting the Markets. Do watch out for those European stocks at the start of today's trade, ASML and Just Eat Takeaway. And then at 9 o'clock this morning, following up on that Netflix number out last night. But I'm more interested in how we're trading Tesla today, ahead of the all sessions reporting on the stock after the close of trade later on tonight. Watching out for Elon Musk's updates on Twitter.